Good morning, ladies and gentlemen, and welcome to the Tungsten West PLC investor presentation and Q&A session. Throughout today's recorded meeting, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time just using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during today's meeting. However, the company can review all questions submitted today, and we'll publish those responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful. I'd now like to hand over CEO Jeffrey Court. Jeff, good morning.
Good morning, and thanks for the introduction. Thanks for joining us, and thanks for spending a bit of time just to go through the update on Hemerdon and where we're at with Tungsten West as well. The disclaimer pack, a number of these slides, in fact most of the slides are covered in our corporate update, so I'll just talk to them and add a little bit more flavour, and then of course we'll go through the Q&A session at the end of the presentation as well to cover any additional comments or questions that you might have as well. A couple of highlights on the investment piece and where we sit as a project. Obviously, the picture above shows the extensive infrastructure we have on site at the moment. That's the mineral processing facility in the background, the tailings storage facility behind it, and to the bottom right-hand corner is the just one aspect of the existing open pit as it sits today. We are sitting on one of the largest, if not the largest, tungsten resources globally. We've just got under 40 million MTUs of contained WO3 in our resource across our three resource categories, which from what I can see makes us the largest, but certainly we're one of the largest, if not the biggest. Critical metals, as we know, tungsten hits pretty well everyone's critical metals list. Dual use applications in new technology and defence. In addition to the very substantial amount of tungsten we have in the deposit, we've also got a very significant amount of tin, which adds a very good secondary revenue stream for the project, and we also sit on premium aggregates, which is also a tertiary revenue stream for the project as well. A couple of key highlights: 80% of the world's tungsten is produced primarily out of China. There's a number of export restrictions that are in play for the Chinese export situation, which has been in play probably more so since February this year, and has caused a strong tightening in the supply position in the market, and we're seeing that reflected in higher pricing as well at the moment, which we'll talk to a little bit further in the slide pack. With Hemerdon Futures, which is the extensions to the north and south of the project, we have an operating life for the entire project, including primary mining, stockpile reclaim, and an ongoing tertiary aggregate sales of over 40 years. As we sit at the moment, we're fully permitted, we're shovel ready, and as you can see from the picture, extensive infrastructure is in play at the moment. In terms of production cost, we'll touch on that as well, but we're in the first quartile cash cost producers, large-scale production with around 3,300 tonnes of WO3 produced per annum at steady-state production levels. We've got a very detailed capital improvement program, which includes the building of a new crushing, screening and ore sorting front end to the process plant, and a significant refurb and technology upgrade for the existing mineral processing facility as well. As you know, we're in a very stable jurisdiction in terms of where mineral projects can sit at the moment. We have in place prior offtake agreements that cover around about 2/3 of our concentrate production, and as you all are well aware, we're AIM listed as well. A little bit about the corporate profile. I've covered most of the points on the overview on the left-hand side. On the right-hand side is some more of the corporate information for the project. I'll just hand over to Alistair Stobie, our CFO, just to talk to that section for us.
Morning. I don't think there's anything new in what is contained there, but I'm aware from some of the questions that have already come, a little bit more understanding around the convertible loan note. So we currently have, on a fully diluted basis, just over 200 million shares. which includes some of the options from when Tungsten West was founded. We would expect, if the convertible loan note converts on the 31st of December of 26, and I'd rather hope that I'm doing something else, to add marginally over 1 billion shares to the share register at 3p. Now, there are two other ways that they can convert, one of which is by reference to any capital raise, and third, a cash out, but only in some very extreme circumstances. But I think if you look at 1 billion as being what's going to be added to the share register, you won't be far wrong.
Okay, thanks, Alistair. Next slide, the executive team. You see most of the faces on that slide on this call, except for our chair, Stephen Harrison. We might just do a real quick round the table with the group just to introduce themselves very briefly to add a little bit more flavour to the points on that list. Alistair, do you want to just go with that one?
Yeah, hi. So CFO, I've been doing natural resources in UK and emerging markets for 25 odd years, 30 years, and principally around capital raisings and structuring companies to go to their next stage. Pretty much the sweet spot for Tungsten West.
Marika?
So hi everybody, I'm Marika Linden. I'm Head of Operations and Stakeholder Engagement. I have over 15 years experience with civil service labour markets and working with diverse communities and engaging in a stakeholder level, working with communities on a one-to-one basis or in a group format, and working through what labour market key strengths that employers have linked with the local community.
Phil?
Hi, Phil Povey. My background is commercial in mining services, mining contracting companies across the globe. So I've worked, Africa, Asia, and extensively through Europe as well, and Australia.
Thanks. And finally, just for me, I've been with Tungsten West for just a little under 12 months now, 30 plus years mining experience, owner-operator, mining contractor, service provider, EPC, EPCM, explosives, blasting services across a global format, including project startups, mostly in Australia, Asia, and Africa as well. Okay, next slide. Tungsten, just as an overview of where that is sitting at the moment. A couple of key comments on the left on the overview side I've covered on the previous slide. Obviously, growth across a number of its final use sectors. More importantly for us, I guess, is the 80% supply position coming out of China, and the export restrictions that have been in place since around February this year. Has caused a tightening in the market. What we're seeing on the pricing side, which is in the chart on the top right, current pricing as we see at the moment is certainly getting high. It's gone up quite a lot in the last certainly 3 months plus is where we're seeing it. FOB pricing in China is now touching $600 an MTU. Delivered into Rotterdam is hitting the 550 mark US dollars per MTU, well above the price assumptions we've run on the feasibility study, which is 400, and we've also done a higher end pricing assessment at 500. Where we see it at the moment, the payback period for the project at 500 is around 2 years, and it's substantially less than that at where we see current price points sitting in the market space. In terms of the market applications, a few key points on tungsten on the left on the overview slide. I won't touch on those too much. There's a key assumption on the compound annual growth rates we would expect to see in the market across the total sector If you look at the forecast between 2 and 5% growth going forward, we see the recycle market pretty much realizing a natural cap, I guess, in terms of the total amount of material that can be recycled into the sector. In addition to that, we see mine closures, and China, certainly prior to the February 2005 period, was at a point where they were importing concentrate due to their shortages internally for their own requirements. Based on a number of those factors, there's certainly a shortfall in the total global position for tungsten supply versus demand going forward. And when you look at that across the two different areas of China supply and demand versus Western world supply, the deficit in Western world supply and demand position is certainly a lot more stark. And all of that leads to the position of saying new tungsten production not in China is certainly needed in the market. Globally, you look at the total picture there and you still see a shortfall in tungsten going forward over that next 5 to 10 year period, with the growth rates, the China production decline, and growth across the number of the sectors that we see in end-use applications as well. Where we fit into the picture, if you look at the bottom right, in terms of total global production, we're sitting at around 4% there or thereabouts of total global production at our steady state number of around 3,300 tonnes of WO3 per annum. That's a relatively small slice of the global world supply when you look at China being very constrained in terms of what's actually coming out of that country at the moment in tungsten production. When you look at the rest of the world production, we're certainly a lot more significant, and we're in that range of around 20% of non-Chinese production sources. But globally, a relatively small slice of the total tungsten supply market. Where we sit as a project in terms of total tungsten resource, you can see where Tungsten West sits. We're just under 40 million MTUs of contained WO3 in our resource. When you look at the other projects, and I've just listed a number of the notable ones there in terms of their total contained million MTUs of tungsten, we're very significant. The next two large projects behind us are two very early stage greenfield projects in Canada. Behind that, you've got Shandong, which is the Almonty project in its process at the moment. And then behind it, you've got a number of much smaller contained tungsten resources that are in various stages of production or restart as it sits at the moment. So a very substantial project in terms of world scale. And in terms of cost position, our all-in sustaining cost is coming in at sub $150 per MTU. It's sitting there at 144, which positions us at the very low end in the lowest cash cost quartile of global tungsten producers. On that chart, most of the large sectors of that are Chinese production. The non-Chinese production are shown in yellow, and that's roughly where we see ourselves fitting in that cost of production curve. So at the low end, at a very, very large scale resource. It's an interesting note as well with regard to these projects and where they're at. The majority of projects that have come online of late have been brownfield restarts, either running through tailings reprocessing, low-grade reprocessing, use of ore sorters to select better material for downstream processing, with more smaller capex requirements. Shandong's obviously the more substantial one, which had an announced number of around $120 million to get going for phase 1 production. These two projects here are greenfield, and their capex to bring those online and the time frame to bring those online would be substantial, being where they are located in Canada. And we're certainly a very well positioned project when it comes to pre-existing development. You do classify us as a brownfield restart project, and our capex requirements are, as we published, $93 million to get us going through to production restart. So we're the last and certainly a very significant cab off the rank when it comes to quick to market brownfield projects with substantial infrastructure pre-existing on site. Just to touch on where that infrastructure sits, that's the layout of our project, where the items highlighted: the tailings storage facility, the mine waste facility, the processing plant, and the existing open pit. A very substantial amount of pre-strip has gone on with the open pit, and prior operations in Wolf Days processed around 3 million tonnes of ore through the processing plant. The operation to the top right is our neighbour and not part of the Hemerdon project. In terms of benefits for all stakeholders, a very substantial project both globally but certainly regionally, where we're sitting in Devon. It's a relatively underinvested part of the UK. We bring a substantial amount of jobs directly to the local community and also indirectly. Our total workforce is above 300 at steady state, and our estimates are around about 1,000 to 1,200 indirect jobs associated with the project when it comes online. You can see a number of the other key metrics that we have in terms of tax paid to the UK government. We're also a very strong producer of low incremental carbon footprint, high quality aggregates as well, which supports the infrastructure development construction sector in the region as well. In terms of our development timeline, we're sitting in the funding stage at the moment. Feasibility study is completed, as we announced a little earlier this year. We're in the process of talking to a number of parties across the debt and the equity funding streams in the data room, and progressing a number of those discussions as we speak. We had a nominal timeline to get funding completed towards the end of 2025 or early 26. We have a number of options that can still work towards that timeline for us, and we're exploring a number of other options and looking at trade-offs before we make a final investment decision on which way we would like to go and how we'd like to progress the best funding solution for the project as 2025 continues. Nominally, we've got a 12-month capital improvement works program. The longest lead part of that is building the new crushing, screening and ore sorting front end that I'll talk to in a little bit. And then we're off to production. So nominally 12 months for that. Production start very end 26, early 27. And during that time as well, you'll see a phased pre-production part of the timeline. The other part of the project, not building the new front end, is refurbishing and installing some new technology upgrades to the existing mineral process facility. And that's incorporated in the phased pre-production phase, where we're re-energizing and recommissioning a component of the plant at the back end of the refinery currently as well. And we also have EA approval for reprocessing 2,500 tonnes of material from the tailings storage facility, which will also give us an opportunity to re-energise the fine circuit as part of the pre-existing mineral processing plant that forms part of the go-forward flow sheet for us as well. Project improvements. If you look at the things that have been incorporated into the restart fee study from 2025, very high level summary of these points. We've got much better access to higher quality ore feed. At the bottom of the stage 1 pit, we're touching fresh granite material, which is now outcropping and present across certainly the southern end of the pit, and isn't far from mining benches across the central and northern parts of the pit. We've had a fundamental ground-up review of the process flow, incorporating not only the 3 million odd tonnes that was processed through the plant in Wolf Days, but also prior work that was done. And we've also engaged in additional test work that was done in the last 12 months to further support the recovery assumptions and prove up the process flow sheet. We've got a new build front end, which includes crushing, screening and ore sorting. We've added some new technologies to the process flow. Ore sorters are part of the new front end, but we also incorporate inline pressure jigs and an ultrafines recovery circuit into the flow sheet as well. Environmental issues, which were part of the incorporated as mitigation requirements for us as part of the mid-2024 EA permit, have been incorporated into the design. Most notably, the LFN enclosures that are required around all potential LFN generating screens across the plant. There's also incorporation of a full refurbishment and improvement of the pre-existing process plant. And I mentioned before, we're re-energizing the back end of the refinery currently, which of course is ironing out any pre-existing issues or bugs for restart that we're addressing now, well ahead of when we would expect to restart the plant in earnest at the end of 26 or early 27. And then, of course, the updated feasibility study, a very comprehensive document which has a number of key experts that have signed off on it for us. The AMC was the lead RAP external consultant that did the entire study, and there's a variety of additional experts that have had a significant hand in that, including Lycopodium for the process engineering component as well. Just to touch on a couple of those points, better quality ore feed. There's the existing pit as we see it on the left with the different geologies. The pink section through the middle is the granite dike, which is the primary host of the material containing tungsten, or our primary ore. Cross-section AA is shown on the right-hand side, and the green arrow, or the green line, sorry, is the fresh ore contact. And you can see where the existing stage 1 pit at the moment is. We do have a very strong outcrop of fresh granite ore in the southern part of the pit, and we're not many benches away from the stage 1 pit of having full benches of fresh granite ore. Stage 2 pit is green, and stage 3 pit, which is the limits of the existing feasibility study, largely is all in the fresh granite ore zone. So we're in a much better position to feed better quality ore to the process plant where we sit at the moment. New build front end, there's a schematic of it which we've illustrated on the corporate presentation. Everything contained within the blue dotted line is new build, including a more standard primary jaw crusher, a secondary cone crusher, a screen. We also incorporate a crushed ore stockpile, which has a substantial capacity and gives us buffer from the primary crushing and the secondary crushing circuit to the ore sorters and the mineral processing facility. Ore sorters are incorporated, which is the new technology. Ore sorters accept only around 30% of the material fed to them, which then goes into tertiary crushing and the pre-existing mineral processing plant. The material not accepted from the ore sorters, that forms the basis of our fresh granite material that has an avenue into the market as aggregate byproduct sales for us as well. Inside the existing facility, we don't use any of the material or any of the primary or secondary crushers that were pre-installed. They weren't fit for purpose and had poor availability. The conveyor belt you see to the top left-hand corner is also not used. And as soon as the material used to go into the process plant, it encountered a scrubber, which unfortunately generated a lot of fines in the Wolf operating days, and also turned the tungsten ore to slimes, which was not easy to recover and presented itself into the tailings dam. So we bypassed the pre-existing primary and secondary, and also and decommissioned the scrubber completely. So this new front end takes the place of that, and we feed into the circuit at the tertiaries, and then we're into the coarse and the fine circuit, which are refurbished with the addition of ultrafines and inline pressure jigs to that part of the circuit as well. In addition to that, we refurbish a lot of the pre-existing plant, including the work we're doing right now on the refinery. One other piece we've got there as well in the right-hand corner, we have a much larger run-of-mine stockpile capacity just prior to the primary crushers. which gives us ability to be a lot more flexible in blending material coming out of the pit to ensure consistent feed into the crushers, into the crushed ore stockpile, into the downstream process. For the process flow, what we've got, the new build front end is shown in the dotted boxes to the left-hand side, which includes the new primary, secondary, the crushed ore stockpile, and the ore sorters. The co-produced product out of the ore sorters is the premium aggregate, which we sell into the market. The rest of the circuit that is shown in green is largely pre-existing. We use a much smaller capacity of the fine circuit and the coarse circuit. So we use roughly about a third of that capacity. We also install the inline pressure jigs and the ultrafine circuits, which are two new technology additions, and we reduce our dependence on the DMS coarse circuit from 3 stages to 1 stage only. The rest of the circuit, flotation, roasting and drying, and low intensity magnetic separation, high intensity mag seps, tungsten and tin concentrate production is essentially the same. What we're running in the circuit at the moment is everything from the dryer. We're not running the roasting part of the kiln at the moment, and we're running the limbs and the HIMS part of the circuit to generate some upgraded tungsten material as part of recommissioning that back end of the plant. The fines, when we come to reclaiming the approval we have for the 2,500 tonnes of material from the tailings storage facility, will go into the fine circuit. So that will give us an opportunity to re-energize that component. So we're essentially re-energizing and recommissioning the circuit from the very back end, which is the right-hand side of that flow sheet, and gradually working ourselves across from right to left as part of the de-risking project for us. Low frequency noise is incorporated in the new design. We have rigid LFN enclosures around all screens that could potentially be LFN generators. They include rigid steel structures for any screen that's inside the existing mineral processing facility. And for the new build component, which is the bit that was shown in the schematic on 2 slides prior, the LFN enclosures are precast concrete, which also forms an excellent LFN barrier. And all of that is incorporated in the restart plan and the restart design. In addition to that, we also have what we call the Hemerdon Futures project. The existing feasibility study covers the extents of the phase 3 pit, which is this yellow line on the pit limits on the diagram to the right. We have an extension of stages 4 and 5, which takes us to the north and south along the strike of the granite dike as well, which isn't included in our existing feasibility study, but has a substantial amount of tungsten ore included within it. And there's potential to extend beyond that as well with the pit optimization and our mineral resource going beyond it. So that's additional life for the project, and includes a substantial upgrade in primary ore feed, additional low-grade material that's stockpiled and reclaimed, and further aggregate material that would have an extended life of total operations beyond the 40-year period that I mentioned earlier. From an economic snapshot point of view, I might hand over. Phil, did you just want to talk to the feasibility study financials and go through the economic numbers?
Yep. So 93 million cash in advance of production. That assumes that no production occurs for approximately 12 months after we raise funds. Potentially some upsides there if we can restart some of the process early, but in terms of the numbers we've modelled, we haven't included any. In terms of the all-in sustaining cost being relatively low. Look, we really do benefit from the offtake. The byproducts. So tin being roughly 12% of our gross revenue, and the premium aggregates. I think Jeff touched on it earlier. The premium aggregates a pure byproduct, and because of that, they attract a very low carbon rating, which is highly sought after at the moment. And we also get the benefit of not paying the quarry tax on fresh aggregates. So a very, I guess, attractive revenue stream that Wolf Minerals never had. We've also got the price in there. You can see there at 500. We've also done some numbers at a $500 per MTU. Obviously, being a mine, we're highly levered to the sales price, and currently at 600, the numbers are substantially better again.
Right. Thanks, Phil. I don't know if we need to go through the key assumptions in the feasibility, Phil, unless you wanted to touch on one or two of the key metrics there.
The FX rate, relatively important. 1.28. We took the 12-month average at the time. It's changed slightly since then, but obviously there's been some changes in the tungsten price, and the tin price is currently sitting above our expectations. In terms of the project life, we capped it at 27 years. We have got additional resources after that. That's in line with our current mining lease, which we would expect to be able to extend, but that's where it sits at the moment. And in terms of the recoveries, our recoveries for both the for tin and tungsten, there's and that's obviously what the Mets guys say. Me being a commercial guy, I'd like to think we can overachieve that over time as well. But we've kept that flat for the time period with a deduction for the first couple of years of production as we start up. Look, we obviously would hope to increase that over time, but we've taken a conservative view.
One point just to raise on that as well, the target concentrate grade is 50% as well, which is lower than what Wolf targeted as their final concentrate grade. They were achieving recovery numbers when the plant was running and there was reliable throughput, which supports the recovery assumptions we've put forward. As Phil mentioned, we do ramp that up over a period of time as well, and each of the different material feed types have also a slightly varied recovery number too. So and as Phil said, we've taken a substantiated and possibly a more conservative approach on the recovery numbers with the lower targeted con grade as a final saleable product. Phil, do you just want to talk through the CapEx breakdown? That's probably the more relevant one, and there's the ASIC numbers and the production as well, just on that slide.
Yep. So the front end is the new crushing system, primary crusher, jaw crusher, primary jaw crusher, secondary cone crusher, and a scalping screen in between. Also a crush door stockpile with an underground feeder, which then goes into the ore sorting system. 6 ore sorters, which will be in a 3 for pebble, 3 for cobble. After that, I think Jeff mentioned earlier, we remove 30% of the feed that goes then into the tertiary crusher, which would then go into the jigs, or the inline pressure jigs, which is a part of the new MPF modules, which then our mass pull from that is 25%. So we end up with a substantially lower portion of material going through the plant or the main part of the plant, or the existing plant that then Wolf did. In terms of the refurbishment and compliance costs there, LFN Jeff's already touched on. There's a number of non-MPF costs, various items that we've committed to around the site. Things like TSF lining and lifts, which need to be done before production. And the MPF other is effectively the refurbishing the plant that already exists. Moving across to the right there, if we go on to corporate commitments, we end up with there's a number of bonds and property items that we need to take care of, and then we've also got a reasonable amount in there for working capital and mining related capital. There's some payments we need to make with our existing with our mining contractor, and then some items that infrastructure costs and a few other minor items we need need to procure, and then net OPEX. So I guess the ongoing cost to keep the business operating and compliant with our permits until we're at production.
All right. Thanks, Phil. The ESG side of things, Marika, would you like to just talk through these aspects for us?
Yes, sure. So a lot of the items Jeff has covered and touched on other slides, but I think I'll just go into a little bit more detail. So at Hemerdon, we are fully permitted and maintain all listed regulatory requirements via the Environmental Agency and the Planning Authority. We have full compliance on site. With regards to sustainability, we are integrating obviously highly sought after aggregates with a high PSV. This turns a waste product that Wolf had as a waste product into something that can be used in construction or on the motorways due to its high slippage and cutting the demand for new quarrying. So that's really important for the sustainability. We've worked diligently on our mining strategy to minimise noise and climate emissions. We've implemented strict monitoring controls on dust and water and noise throughout the design phase, and we ensured that the mine design has significant improvements to lower impacts. We've worked collaboratively with all of the environmental agency, the planning and local parishes, actually rolling out designs and bringing people up on site whilst we've been testing various parts of the equipment. On the restoration, we have a £13.2 million bond in place detailing planned restoration, including tree planting and obviously preserving the biodiversity enhancement zones. On the social side of things, really proud. We have a very robust health and safety procedure. We're proud that we have 0 lost time injuries since acquiring Hemerdon. We've worked tirelessly with the building relationships with the neighbourhood parishes by facilitating local weekly sessions, site visits for schools and community groups, educating the community on the criticality of tungsten, tin and the secondary aggregates and what that means with the secondary aggregates. That's a low carbon footprint. Recruitment, Jeff has touched on, but local recruitment is in the company's DNA. We're preparing for what that looks like to launch, pop-up recruitment centres in the immediate parish areas, working collaboratively with job centres of a 50-mile radius, creating sector-based work academy programmes and forming part of the Armed Forces Covenant, providing guaranteed interviews for ex-military and personnel and their families. We're also part of the Critical Minerals Challenge Centre, working collaboratively with the Campbell School of Mining and the University of Exeter, working with various other educational bodies, preserving what is required for our future workforce. And just to briefly touch on the governance, we have ingrained into the business our codes of conduct, and we have been consistently upholding all the regulatory standards, working closely with the planning, Devon County Council of South Hams and the environmental authorities. We are also positioned to roll out a quality ISO system to achieve our full suite of ISO accreditation prior to production. I think that covers it.
All right, thanks, Marika. All right. Just to conclude the presentation side, you've seen a lot of the detail that's gone into the fee study covering the restart. Key aspects, we're low cost, we're a massive resource, we're fully permitted, we've got a long life, and the strong economics you can underline even more so with current market pricing and what we see as tightness in the global tungsten supply and demand balance at the moment. So that concludes the presentation. We'll hand over to some questions and answers.
So the good news, we have a series of questions which have appeared during the and keep them coming. The good news is that as I get to pick which ones comes first, so I hit Jeff up with my favourite here, which how are you managing the balance between advancing technical work packages and preserving cash ahead of securing the $93 million financing package?
We've done, I mean, in the time frame certainly that I've been here, and as you know, Alistair, as well, we have been very targeted with the spend on additional test work, and we have done quite a bit of additional test work in that time frame, including 2 additional bulk samples with ore sorter technology with our partners at TOMRA. In Germany, we did further work on how we could optimize the ultrafines recovery circuit, and of course looking at how the IPJs would perform in the new process as well. So very targeted spend on that. That gives us a very strong position for the flow sheet, which underpins a very long-term operating future for us as well. If you said where would we like to spend some additional work, I think we could target some smaller spending, and we've got that currently underway at the moment on just refining the ultrafines to make sure it's the right final stage design and key targeted circuit for us. The next work, which I don't think comes in the time frame window before we would expect to see funding, but after that is we've allocated some money in the go forward budgets for just better understanding some of the different material processing and getting ourselves ready for primary processing, more so of materials like the Killis or the surrounding rock material, and ensuring we're prepared to do that in future years of the operation. But in terms of work that needs to be done right now, we're very confident we've done the test work already, or at least have a small piece in train right now, which is covered in our cash forecast. The rest can be done after the funding piece.
Here comes another favourite for me. What would it take to lift annual production above 3,300 tonnes per annum?
Yeah, it's and I said there's a couple of questions just in terms of market size and our capability, given the fact that 80% of the world's supply position is somewhat restricted at the moment. We've targeted the 3,300 number. It fits in with the capacity of the front end, but a key piece about the new build front end is we only are operating the primary and secondary crushers and the screens to the stockpile. We're only operating that from 7 a.m. to 10 p.m. at night. So immediately with the potential, and I know in the Wolf days we were operating 24/7, that side of the process, with the ability to prove we can operate within the environmental constraints, the noise, the LFN. If there was the option to expand that front end to operate 24/7, we would be able to increase production upwards of that 5,000 tonnes number on the front end feed component. The rest of the process plant on the fines and the coarse circuit has inherent capacity already installed. We're only using a small percentage of that. We would then need to look at what we do on the back end refinery part of the plant just to expand that. But incremental capex to do that, if we move to say 24/7 front end operation, and that's a question whether we would like to pursue that. We could move to 5,000 tonnes with pretty minimal capex spend as well, if the market was there for us. As we see it at the moment, about 2/3 of that production is underpinned with pre-existing agreements. The other third is free float for the market, and we're just looking at how we best optimise that at the moment too. So we can go higher if we need to, and if the market's there for it, we could expand relatively quickly and relatively low capex.
Yeah, just on that, just to add to that, in terms of we would need extra mining equipment, we're pretty confident we will be able to lease that equipment for at least a period of time to reduce capital outlays.
The specific question was related to the offtake agreements and how they fitted in to the EXIM facility. But I think maybe if I expand that question and say, to what extent do those two in-place offtake agreements fit into our debt financing packages, and how does that help the debt packages? And I think I'll probably just add briefly at this moment that we're not able to say who they're with. That's just from a confidentiality point of view. But if I can leave how do they fit into the debt financing packages, was the question that's being asked.
Well, I guess the EXIM piece, the untied letter of interest we received from EXIM a little while ago, is it's fully aligned with those agreements. So it supports supply of product into the US. So nothing is compromised by that position or those positions.
In relation to exploration upside, when do you think we start talking about exploration after we start production?
I'll just flick through to a slide that hopefully answers that. And working previously for a company that did a lot of exploration drilling, I'm not so sure we'll be a big user of exploration drilling in the very short term. But there's just a picture of our mineral resource on the left in terms of the total contained tungsten, WO3. And on the right is what's the ore reserves, which is included in the phase 3 pit. So you can see what's ahead of us in our MRE, which has the reasonable prospect for economic extraction, it is substantial. And even if you include the measured and indicated component, it's roughly more. Well, it's more than double what we currently have in the stage 3 pit limits for the ore reserves. So we've got a lot defined in the measured and indicated category. Inferred almost doubles that again as well. But with the extent, and a large part of that is the extensions to the north and south that I mentioned in the Hemerdon Futures project, which is already well defined in the MRE category. I don't think we'll be doing a huge amount of drilling in the short term because we just have so much ahead of us that sits in a pretty well proven category for MRE and work that could be converted across to ore reserves when the pit extensions occur to the north and south. So I wouldn't expect us doing a huge amount of exploration drilling in the short term with that amount of mineral resource already sitting under our remit.
Would you consider collaborating with your fellow prospect tungsten miners such as Cornwall Resources to our north, contract processing or other ways of looking at it?
Yes, I mean with the spare capacity in the existing facility, we would be certainly an opportunity to explore, co-processing, toll processing, or other arrangements. Given the existing infrastructure we have on site, it certainly saves other people investing in that level of real estate and investment and infrastructure. So yes, it would be certainly something we'd consider. Our focus, as the team knows on this call from our side, has certainly been getting the project economics, getting the restart plan done and the feasibility study underpinned, which purely only looks at the existing resource at Hemerdon. If other projects made sense and added economic value, of course we'd be open to that for sure.
As you can imagine, there are a number of questions that relate around the financing that we're going through. What, if any, conversations are ongoing with UK government, with the EU, in respect of financing and so on? I suspect EXIM, DLA, and DPA fit under the same category.
Yeah, I mean, any government-backed funding source is certainly of interest to us. There's a number of parties across EU, UK, and US governments that are part of that interest group at the moment and going through their own assessments for potential funding options for us. So all of those avenues are of interest. Certainly the nomination or award of us as one of the 13 critical metals projects outside the EU recently has piqued that interest a little bit more out of the EU in terms of our critical supply position, especially when one of our offtake streams is supplied into the EU. And of course, the US is very interested, as you've seen with the LOI coming out from EXIM. UK government also very interested and certainly still in the mix at the moment. All avenues are being progressed at the moment.
I think that covers those that we can answer. Here, there are a couple that just require a quick note, but I think that's
that's great.
the end of the Q&A.
That's great. Thank you very much indeed to you all for your time, and thank you to everybody for your continued engagement and your questions throughout today's presentation. Jeff, I know investor feedback will be particularly important to you and to the rest of the management team, and I'll shortly redirect those on the call to give you their thoughts and expectations. But before doing so, I wondered if I may, Jeff, just ask you for a couple of closing comments.
Yeah, thanks. Thanks everyone for your questions, comments and feedback for today. It's always a pleasure talking about the project. The project's at a very exciting phase. We've worked very hard to make it as robust as we can internally. And currently we're seeing also a lot of very supporting positions from the external market, which places us in a really, really strong position to move this project forward quickly and deliver excellent returns. We're very large scale, very low cost, fully permitted, ready to go. It's the funding piece that's the final cog in the wheel for us, and we can generate a very strong future out of the project.
That's great, Jeff. Thank you very much indeed once again to the team from Tungsten West. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a couple of moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Tungsten West PLC, we'd like to thank you for attending today's presentation and wish you all a good rest of your day.